Hey guys, welcome back to the channel Jake World 035. I'm Shake, and today we're diving deep into how to invest like the pros in 2025. This isn't just about picking stocks, it's about understanding macroeconomic trends and the discipline required to build lasting wealth. The game is changing fast, and if you're not adapting, you're getting left behind. In this video, I'll show you actionable tips, portfolio tactics, and the latest trends to help you grow your wealth with confidence. Let's get into it. All right, first things first, let's set the scene. The investing world in 2025 is more technologically advanced and interconnected than ever before. Gone are the days of picking a blue chip stock and forgetting about it for 20 years. One of the biggest game changers is the dominance of artificial intelligence and algorithmic trading. Sophisticated programs make buy and sell decisions in microseconds, impacting market liquidity and volatility. Understanding their behavior can give you an edge. AI-driven markets can react quickly to information, creating both opportunities and risks. Pros use AI tools to analyze trends and make decisions. Interest rates are beginning to stabilize, which could mean a more predictable environment for certain asset classes. Trending sectors include green energy, tech innovation, and digital assets like Bitcoin and Ethereum. Geopolitical risks and inflation are still concerns that need to be factored into your investment decisions. Pros are constantly assessing these macro risks and considering how to hedge against them. Before buying a single share or a fraction of a Bitcoin, understand the environment you're stepping into. Stay informed about economic indicators, technological advancements, regulatory changes, and global events. The more you understand the context, the better your investment decisions will be. Pros don't just look at charts, they connect the dots between what's happening in the world and how it impacts different asset classes. They read extensively, network, and analyze data from multiple sources. For you, this might mean subscribing to reputable financial news outlets and following insightful economists and market analysts. Building this foundational understanding of the 2025 landscape is the first step to investing like a seasoned professional. It's about developing a panoramic view of the market. This isn't a one-time task. It's an ongoing process of learning and adapting. The more you understand the context, the better your investment decisions will be. Let's move on to building your financial fortress. Now that we've got a handle on the big picture, let's talk about building a solid financial base. Before buying any stock, bond, or crypto, you must build a solid financial base. The first pillar is your emergency fund. Have 3 to 6 months worth of essential living expenses saved up in an easily accessible, safe account. This fund is your safety net, protecting your investments from you. Without an emergency fund, you'll be forced to sell your investments during a crisis, potentially at the worst possible time. The second critical piece is to aggressively pay off high-interest debt. If you have credit card debt at 20% APR, you're fighting a losing battle. Clearing high-interest debts is like getting a guaranteed, risk-free return equal to the interest rate you're no longer paying. Once your emergency fund is in place and your high-interest debts are under control, set clear financial goals. What are you investing for? Short-term goals like a down payment on a house, or long-term objectives like retirement? Your goals will dictate your investment strategy, risk tolerance, and time horizon. For short-term goals, lean towards conservative investments like bonds or high-yield savings. For long-term goals, you can afford a higher allocation to equities. Pros don't just invest, they plan first. They have a roadmap and adjust it as circumstances or market conditions change. Take the time to sit down and clearly define your financial objectives. Write them down and make them specific, measurable, achievable, relevant, and time-bound. Smart. Building this strong foundation is what separates amateurs from those who approach investing with a professional mindset. It's about creating stability and purpose for your financial journey. Let's talk about professional diversification in 2025. Your financial foundation is solid. Now let's talk about diversification. Diversification isn't just about owning different things, it's about owning different types of assets that behave differently under various market conditions. A sample diversified portfolio for 2025 might look like this: 40% in stocks, 20% in bonds or index funds, 10% in crypto, 10% in real estate, 10% in cash or high-yield savings, and 10% in alternative assets. Within stocks, diversify further with large-cap stocks, global stocks, and innovative tech companies. Bonds offer stability and income, acting as a counterbalance to the volatility of stocks. For those comfortable with higher risk, allocate a small percentage to established cryptocurrencies like Bitcoin and Ethereum. Real estate exposure can be gained through real estate investment trusts, REITs, or fractional real estate investing. Keep cash on hand for liquidity and to take advantage of market opportunities. Alternative assets could include AI startups, commodities, or collectibles. And diversification isn't about playing it safe, it's about strategic asset allocation. Different asset classes perform differently in different economic cycles. By thoughtfully spreading your investments, you aim for more consistent returns over time with less volatility. It's about optimizing your risk-adjusted returns. This careful balancing act helps pros sleep at night, even when markets are turbulent. Diversification is a fundamental strategy for managing risk and enhancing potential returns over the long haul. It's about building resilience into your financial plan. Let's move on to using digital tools like a seasoned pro. Now, let's get into how professionals in 2025 are using technology to crush it. Technology has democratized access to sophisticated investment tools and information. One of the most impactful tools is the robo advisor. Platforms like Grow, I&D Money, Betterment, and Wealthfront use algorithms to create and manage a diversified portfolio for you. They offer low fees, low account minimums, and features like automatic rebalancing and tax loss harvesting. Robo-advisors take the emotion out of investing and make diversification easy. Pros are increasingly leveraging AI-powered insights to get an edge. AI tools can analyze vast amounts of market data, news sentiment, and social media trends to identify potential patterns. Automated investing through systematic investment plans, SIPs, is another powerful tool. Set up automatic transfers from your bank account to your investment account on a regular schedule. This strategy, known as dollar cost averaging, is a cornerstone of long-term wealth building. Portfolio trackers help you keep a clear overview of all your investments and their performance. Use robo-advisors or automated SIPs for disciplined execution. Leverage AI-powered tools for insights and research. Employ portfolio trackers to stay organized and informed. By doing this, you free up your time and mental energy to focus on your overall financial strategy and long-term goals. Technology is your ally in becoming a more effective and efficient investor in 2025. Let's talk about professional risk management tactics. Smart professional investors are obsessed with managing risk. One fundamental tool is the stop-loss order. Set a stop-loss order at a certain price below your purchase price to limit potential loss. There are different types of stop-loss orders, like a standard stop-loss or a trailing stop-loss. Another crucial strategy is to rebalance your portfolio regularly. Rebalancing involves selling assets that have performed well and buying more of those that have underperformed. This ensures you're not overly concentrated in any one area. Minimizing fees is another key aspect of risk management. Invest in low-cost exchange-traded funds, ETFs, or index funds. High fees can significantly reduce your returns over time. Never invest money that you cannot afford to lose. This is especially true for higher risk investments like individual stocks or cryptocurrencies. Risk management is the critical difference between gambling and investing. Gamblers chase jackpots with little regard for potential losses. Investors make calculated decisions, understanding the potential risks and taking deliberate steps to mitigate them. By implementing strategies like stop-loss orders, regular rebalancing, and choosing low-cost investments, you adopt a professional mindset. Prioritize capital preservation alongside growth. Let's talk about staying sharp and consistent in 2025. The financial markets are constantly evolving. New technologies emerge, economic conditions shift, and strategies that worked yesterday might not work tomorrow. Your first habit in 2025 should be to curate a reliable stream of financial information. Follow trusted financial YouTubers, insightful blogs, and reputable newsletters. Seek out a diversity of perspectives. Make time to read books on investing and personal finance. Timeless classics like The Psychology of Money by Morgan Housel and One Up on Wall Street by Peter Lynch are invaluable. Understanding your own financial psychology is just as important as understanding market mechanics. Consider joining investing communities or taking online courses. Engaging with other investors can be a valuable learning experience. Investing in your financial education is one of the highest ROI investments you can make. Consistency beats intensity. It's not about making one brilliant investment move. It's about consistently applying sound principles. Small, regular contributions to your portfolio and your knowledge base will compound over time. Commit to being a lifelong learner. Stay disciplined in your approach. Keep investing for the long term. That's how you truly invest like a pro, year after year. Let's recap and discuss next steps. Your 2025 Pro Investing Blueprint. Recap and next steps. Let's recap the core principles we covered today. Understand the market. Build your financial base. Diversify wisely. Leverage tech tools. Manage your risks. Keep learning and stay consistent. If you found this helpful, please smash that like button and subscribe. Download the Pro Investor Toolkit 2025 PDF from the link in the description below. Thanks for watching.